A very good afternoon to you, our cherished listeners. It's always indeed super exciting to come your way every Wednesday with your favorite business development program on Radio Masterclass. Masterclass is powered by Joy Business and brought to us by Goyle. Goyle, they say good energy. Goyle, Yenara, Yedia. It's the 19th day of August today, 2020. And yes, indeed, we're still in the 8th month of the year. Like I always say when I start the show, it's just a couple of months to Christmas and yes, also to election 2020. It certainly does feel good to bring you today's edition of Masterclass. We've been spending some time here on the show talking about the all-important subject of taxation. Today we're going to be spending some time understanding how tax not just affects our businesses and our lives, but also affects the specific area of employee income. I know we had a lot of questions last week when we started. We tried to take some of your questions, and then when we start the interactive session today, we're going to start with some of those questions. But by all means, you do want to stay tuned so that when we get interactive, you pick up that phone, give us a call, and share thoughts. Let's try to understand this subject of taxation because it's not going anywhere. You know, like I said when I had this chat with somebody before this show, it's one of those double-edged swords which seeks to take from us as inhabitants of a city-state or a state or a country and give it back by way of building that country. And so it's compulsory, it's mandatory, it's backed by law. Whether or not we want to do this, this is something that we have to do. And again, I have back with me in the studio my friendly taxman, the person of Mr. Kofi Frimpong-Corey from KPMG. Kofi, you're welcome back to the show.
Thank you, yeah.
Yeah, we're excited to have you. I think that you are helping us make the subject of tax a bit more friendly and a bit more non-confrontational, if you like. I mean, people pay tax because they have to, you know. And I was looking up a couple of people who had also said a few things on tax, and this is what Plato had to say, the philosopher. He says that where there is an income tax, the just man will pay more, and the unjust man will pay less on the same amount of income. I will not seek to try and understand what Plato was trying to say, but again, we also have the scientist, the very famous scientist, the theoretical physicist, Albert Einstein. And he also had this to say about tax. You'd have thought that these were scientists and philosophers, and so typically they wouldn't have anything to say about science. But here's what he also had to say about science. Says that, and this is Albert Einstein, says the hardest thing to understand in the world is income tax. And I don't suppose that the conversation or the thought process there was that he didn't understand it. But I suppose he didn't understand why it should be. And so you are here today, our friendly taxman from KPMG. You're going to help us understand this conversation on income tax. Maybe a quick recap we don't have a lot of time today, so maybe a quick recap from last week just so we can help with flow of thought for our listeners who have been taking some notes, and then we go straight to today's conversation if you like. So over to you, Kofi.
Thank you, and good afternoon to listeners. I think for over the past 2 weeks we've been discussing the issue of tax, trying to let people understand what it means and our responsibilities as citizens, and also the responsibilities of the Revenue Authority in ensuring that the needed monies or the revenues are generated for the development of our country. So last week we discussed business taxes for companies. So we mentioned the responsibility and the requirements for companies to file their returns, to prepare their accounts, and also we talk about withholding taxes. The fact that we are supposed to be taking withholding taxes from the services that we enjoy, the goods that we acquire, and then also the things that we enjoy from time to time. We also indicated that there are differences from what we call profits and what we call chargeable income, also for businesses also to know, and certain aspects of expenditures and things that are not allowed if you are running businesses. In the same way, certain incomes or aspects that we are also supposed to include in our businesses. Then, of course, we also talk about how people are also required to do what we call estimate or self-assessment on their own at the beginning of the year, and that will show them how much they are required to pay over the period or during the year for which they are supposed to pay their taxes on a quarterly basis. There are certain aspects of individuals or businesses also that because they do not have the requisite skills or the expertise to put their records together, the Revenue Authority on its own also gives them what we call an estimate for the provisional assessment for them also to pay. For such people, what they are required to do is at the end of the year, they are now supposed to file their own returns and estimate or determine whether what they've been paid or they've been charged by the Revenue Authority equals to what they are supposed to pay, and if not, then they should apply for refunds. And we made it clear also that there are refund processes in the system for people who overpay taxes. So people need to file their return and avail themselves for those opportunities in going to file to claim their refund. So that over the year is what we have done and what we have discussed in the past 1 week.
Right, so today we're focusing on the conversation essentially on income tax, right? So essentially this is the income that comes to a person after they worked for a period, let's say 1 month. Does this affect, and don't answer it directly, but in your presentation, does this encompass people who also earn not necessarily on anniversary of a month, but let's say a shorter period? Is this all part of the income tax while you address that concern? So we want to see those who are within this bracket and those who are without. Okay. And then we can have that conversation also.
Okay, I think I'll begin just by summarizing to say that income tax or employment tax is the gains or profit that anybody who is engaged or who is in business or who is in employment earns. So as you rightly said, as long as you earn income, whether as part of a monthly employment or as an individual who is doing your own small shop somewhere, or you have a sole proprietor, you are from your own place. So as long as you are earning income or you are earning profit or you are making a gain out of that employment, you are required to pay income tax or employment taxes. And it includes salaries that people earn. So like you rightly said, wages. So even if when you earn a wage, for whatever work that you do, you are supposed to pay taxes. It includes even leave pay. For those who work, there are some people who do not go take their leave and they decide to sell their leave. Some businesses, the contract arranges that if you are not able to take your leave, your employer can buy the leave.
But let me correct this one. And typically, I wouldn't interrupt you, but I have an HR background, and my HR people would be sorely upset with me if I don't correct this.
Okay.
According to the labor law, any agreement that allows you not to take your leave is void. It's a matter of law. So even though some people are doing that, it is wrong. We just want to educate people on masterclass. If you are selling your leave in your company, it is wrong. You are not allowed to do that, not as an employer, not as an employee. But please go on. You are a taxman. I'm the HR man.
You're perfectly right on that one. But I'm saying that if you do,
right.
So let me also put that to say that there's no morality in tax. So even though that aspect is wrong by law, if you do and you earn income, the taxman will take his due. So that is also one clear thing.
And prosecute you on top.
And prosecute you on top. So let me see it that way. So sometimes people even say that even if you go and let's say our country laws abhors prostitution, but if you go and do prostitution and you earn income, you are required to pay taxes on that income that you have earned, even though it's illegal and it's not backed by law. We are not supposed to do it. So the tax is not, does not deal in terms of morality. You won't say that this is not moral or is immoral. As long as you have earned income, you are required to pay the taxes on it.
I'm interested, and I think we're going to have a look after today's session, after this month's session, about tax and the law.
Okay, that's fine.
I'd love to have a lawyer in the studio as well. Because it's interesting to find out that the government will take tax. Tax is morality agnostic. That's what you're saying.
Correct.
I will not belabor that point. Let's talk about income tax today.
So tax will not go into the morality of how you got your income. So let's even take drugs. We all know that in this country it's clear that you don't. Dealing in drugs is illegal and you'll be prosecuted. But if you earn your income from drugs, the taxman will collect its due as far as that income is concerned. So like you rightly said, maybe you could go into the legality and the tax itself aspect, getting lawyers and getting the taxman also to sit across the table, and then we can discuss how it goes. But that's clearly how it is. So like I said, it includes your leave pay, it includes fees, commitments, overtime. If you do work overtime, the law has issues of how you can tax overtime and as well as things. The allowances, several people get all manner of allowances, clothing allowance, rent allowance, fuel allowance, vehicle accommodation. All those ones are considered as income from whatever business employment that you have acquired. So those ones as well are also taxable. Then of course, last week I mentioned it. If you get gifts as a result of your employment, those gifts are also taxable. So we also need to be mindful of that. And then other discharges. If let's say as an individual, your employer decides to pay your children's school fees, which usually happens for some form of expatriates. they pay your students' school fees, they pay for your maid, they pay for your gardener, they give you accommodation and all those stuff. Those expenses are considered as domestic expenses for you, the employee. So if your employer pays those expenses for you, all those things are supposed to be quantified and taxed. So the income encompasses a lot more things that people earn than maybe they are usually declaring to pay tax on. So that in itself is what goes into income. So if you are working on a weekly basis and you are earning wages for that week, you are supposed to pay taxes on it. So all in all, every work that you do for which you get remuneration or for which you get income, it be in the formal sector or in the informal sector, that the income tax applies to it, and we will call it employment tax.
Right. I'm sure that there'll be a lot of questions that come through, but one area I'd like for you to address for me before we get interactive, essentially, is this: what are the different rates and bands that apply to who? I mean, you have clarified the point that regardless of your nature of employment, once there's an income to be made, there's a tax to be claimed. And somebody says, once there's a man to pray, there's a God to answer. So we know that everyone will pay tax regardless. But what are the various bands and rates applicable to who?
Okay.
Yeah.
So generally, there is the Ghana tax law for employment is on the what we call the graduated scale. So that's what we are calling the band. So it usually starts from a portion that is free up to the highest band. Currently, the highest tax rate in the country for residents is 30%. So it starts from 0% to 30%.
30% of what?
Of the income you earn. So that's what I'm saying, it's graduated. So let's say you earn, your basic salary is 10,000 a month. Let me break it down. If your basic salary is 10,000 a month, there's a portion of that amount that is free, and that portion currently is 319 cedis, and that is how the tax law is. So 319 cedis of that 10,000, you don't pay any tax on it. So you subtract that from the 10,000, and that is after you have taken.
It's a percentage. What is that? I'm sure we can work it. Maybe yeah. Let the team work it in. Yeah.
So let's say your basic salary is 10,000. That is one. You take off 5.5%, which is social security. So that is also not taxable. So after you take the 5.5%, whatever the amount has left.
But social security is even for you, isn't it?
Yes.
I mean, it's in your interest.
Yes.
Then there's NHIL.
There's NHIL. No. I mean, for this one, let me also put for employment taxes or for those who are engaged, even if you are self-employed. Everybody contributes. You are supposed to contribute 18.5 of that amount to social security. Okay. The first year and the second year. As a security for the future. The law also, the tax law also allows you to contribute extra 16.5%. Additional. So we have a room of 35% of your basic salary to contribute towards your pension. That is also one area that a lot more people are not taking advantage of. And all this amount is tax-free. So if, let's say, on this 10,000 that I mentioned, you take the full 35%, which is 3,500, it means the 10,500 is taken out and you don't pay any tax on that amount. You are now going to pay tax only on the 6,500 that is left. And that will be based on the graduated scale that I'm talking about currently.
Let me just clarify this. What you're saying, if I understand you, is that once you get a certain amount, 10,000 for example, at the end of the month, once we take out your SNIT, which is your 18.5%,
correct,
that 18.5% is not taxable.
It's not taxable.
Then you have up to 35%.
Okay.
If you're able to take all that 35%, all of that is not taxable.
Correct.
What is the relationship between the extra 16.5 and the second tier pension and all of that?
Okay. So the first 18.5 that I mentioned goes into the first tier and the second tier. You know, our pension law, which I'm sure the National Pension Trust will be able to explain much further, but for my layman view, let me put that way, I understand.
So you are a taxman, so it's okay. We'll get the pension guy.
The law allows you to do what we call a third tier, which is a voluntary third tier. So that one, so that's how come that
tier 3.
The tier 3. So that is a tier 3, and you are required to do a maximum of 16.5 for the tier 3. So that's the relationship. Tier 1, tier 2, 18.5, and there's a tier 3. But that tier 3 is voluntary. So because it's voluntary, a lot more people also don't take advantage of it. And I'm saying that today, if you are listening to me, is a better way or a nice way of contributing towards your future without having to pay taxes on it.
But let me then ask this question. I mean, so for those who do not do the 16.5 and they don't know about it, so they don't put it down, or they're putting it into some kind of insurance for the future, at what point does the taxman tax somebody who's earning 10,000? Will they tax the person on the remainder after the 35% is gone, or they will tax after the 18 because the person doesn't know that they're supposed to take the 16.5?
You see, they also say that the extra CT is supposed to be voluntary. So the taxman will not know whether you have opted to do it or
he
not.
doesn't know, or that he wants to take it.
No, it's not that. You see, they say we don't make any imputation into the law. I mean, for him, what we are saying is that you have this room to do. So you are filing your returns at the end of the month. Your basic salary is 10,000. There's a mandatory 18.5. So the mandatory 18.5 is taken. If you have gone ahead to do the voluntary 16.5, you are supposed to show to the taxman that you have done that. You haven't done that. They will not make any assumptions into it that because the law says that you can go 35%, they will assume that you have done 35%. Okay. So they will not make any assumptions into it.
Let's get. I mean, I know some of my HR guys are listening. Senor Sambuafo, if you are an HR practitioner, you are listening. I'd like for you to give us a call when we open the phone lines. I want to be able to understand this thing properly. So let's put it into context. By the time my salary hits my account,
yes,
the 18.5 by my employer is already deducted.
Is it correct?
So I'm trying to find at what point the taxman will take his money. If by the time the money hits my account, the 35% is all out, is that where the taxman takes his money? Because you see, the HR or the employer is also the tax agents of the government.
Correct.
So when he's taking my 18.5, why doesn't he take my 16.5?
That's why I said that the 16.5 is voluntary. So if you are not doing it, and you need to also pay it into a registered trust. You know, now we have a number of trustees in the country, so that trust needs to be registered. So if, let's say, Yaw Barnafo, you are also contributing extra 6.5% to a third tier, you are also required to notify your HR that look,
so there should be a notification.
Yes, because the HR also cannot assume for you that you are doing that contribution.
Okay. So I was going to say that I can only make that payment after I have received it. And by the time I receive it, the tax agent of the government, which is my employer, has already taken the 16.5.
Yes.
So we're educating people today.
Yes. So
that you have another 16.5.
Correct.
And you should notify your HR that you want to be able to put that into a certain trust.
Correct.
When that notification has taken place, then they will not deduct or tax you your income.
So you have to show evidence, show proof that yes, indeed, I've registered with this trust, and I'm contributing an extra 16.5% of my basic salary into that trust.
Right.
Once you are able to show those documentary evidence and proof and the registration, your HR can, based on that, add that one to your deductions from your salary when they are doing your tax. So, like I said, your 10,000 is your basic. The first deduction that they will make is the 18.5%. That is mandatory.
Right.
Your HR is mandated to do, so they will take. If they take and let's say it comes to 2,000, what it means is that you have 8,000 left, which is taxable. So out of that 8,000, like I earlier indicated, the first 319 cities, government says because it relates to sort of like a minimum wage. You know, minimum wage is not taxed in this country. Yeah. So if you earn only the minimum wage, you will not pay any tax.
For the purpose of education of my listeners, what's the minimum wage in Ghana today? I think it's about $12 or so.
No, the last time I think it was 14.5 or 15 cities or something. If I recollect properly, but we can
minimum daily wage.
Minimum daily wage.
Right.
So, but I'm not sure a number of people. So if you earn that one, then times 20 or times 22 for the month, for that amount you will not pay any tax on it. So that's how come the first 319 is free. So that they want to also make everybody benefit across board like that. Then there is the next 100 cities. It looks small, but the next 100 cities also tax at 5%. So the next 100 cities of your 8,000, so the 319 is taken off free. The next 100 now comes to 5%. Then the next 120 cities is also at 10%. The next 3,000 is at 17.5%. And then they have the next 16,000. So it is graduated like that. Beyond the next 16,000 or beyond any excess beyond this point, which when you add is about 107,000 for a year. Any amount beyond that range is taxed at 35%. Sorry, 30%.
Flat.
So if let's say you're 10,000, there is an extra 1,000 that goes into this band. That 1,000 will be taxed at 30%. So when they finish, then they will add the individual 5%, 10%, 17.5%, 20%, 25%, before you get your.
Why the graduation for different portions?
Is to make it what we call progressive.
Right.
So that people who are earning higher are pay more than those.
So that the higher you earn, the more you pay.
So that people will I mean, you are not earning 20,000, I'm earning 5,000, we are all paying the same tax.
Let's use a scenario for someone who earns, let's say, we've talked about 300. Let's say your first 400 Ghana cedis is free. Yeah. If you're earning anything about 315 Ghana cedis or 19, you shouldn't be paying tax. Yeah. Right. Let's start from someone who earns 500 Ghana cedis. What would their tax regime be?
So if you earn 500 Ghana cedis, as I'm saying, and we are going by the same analysis, then 390 of that one will not be taxed.
Right.
So 500 minus 319 would then give you something like 181. So out of that 181 Ghana cedis, 100 of that one will be taxed at 5%. So that will be 5 cedis.
I see what you
and then the remaining 19
is a numbers game.
Goes to the next brand, which is 10%. So that 10% of 19 is 1.9. So if you earn 500 cedis, you'll be paying 1.9 plus 5 cedis, that is 6.9 cedis as your tax on monthly basis.
What is the lowest percentage? The highest is the 30%.
Yes.
The lowest is what?
That's 0.
After 0 is
After 0 is 5.
After 0 is 5.
Yes.
If you just tuned in, this is Masterclass right here on your super station Joy 99.7. We're discussing the issue of tax on your income as an employer. So, an employee, essentially, we're looking at employment tax today. We'll be opening the phone lines and getting interactive shortly. By all means, if you want to send us your comments, you can do that on 0244 340-437. Let me ask you this question very briefly before I want to get interactive. Why does it appear, and I'm asking this question, is a biased question, but I'm asking it all the same. Why does it appear that there seems to be an innumerable number of tax obligations for those who are already taxed? I mean, I understand why the state would want more tax, because obviously the needs of the state are many, and there's a lot of dependencies on the state. But why are we not looking at taxing? Maybe we are looking at it, but my point is, if you keep coming back to the same people who are paying tax, there'll be some fatigue at some point, wouldn't there? I mean, now we're introducing all sorts of things. My 16%, I don't know about it. You are taxing it. When I go and buy a tin of milk, you are taxing it. When I buy fuel, you are taxing it. I mean, now the CST, Communication Service Tax. And there are people who don't pay tax.
No, I think, getting more people into the tax net has always been a challenge. And it's one of the things that policy and discussions will help drive those things. But let me also add that, look, I mean, we keep saying that a lot more people are not paying taxes and the same people are paying taxes. You see, there are various forms of taxes. There are direct taxes, as I mentioned on our first week, and there are indirect taxes. In most cases, indirect taxes is based on consumption. So as long as you consume, you will pay. So that if you don't want to pay indirect tax, then I would say that don't consume. So we need to sometimes draw the distinction between what is direct tax and what is indirect tax. For your direct tax, as you are discussing income tax, for instance, the moment that your income tax, which you have discussed, is taken. And so let's say for your 10,000 basic, if your tax end up to, let's say, 1,005, it means that you get 8,500. That amount of money, as far as income taxes are concerned, will not be taxed again. But however, if you decide to go, let's say Kempinski, to go and enjoy there, then for consuming, you pay consumption tax, and that will be some of the taxes that you need to be paying out there. The other issue, you are right, I mean, they keep going, so people, sometimes they'll come to you for direct tax. At another time, they'll come to you also for your consumption tax, which is indirect tax. So that's how come sometimes it tends to seem that maybe people or the tax might go to the same person. But, of course, all of us, I also believe that sometimes the citizenry also need to be conscious of our responsibilities. Look, if you travel, and sometimes some of us, by virtue of the work that we do go to conferences here and there, and other places, people voluntarily go and file their return, put themselves into the tax net to be able to also pay their portion. But even here in Ghana, even for those of us who are identified, some of them suppress their taxes, and that's the quotation that you gave that Plateau or somebody else said. Some of them even suppress the income that they make, so they don't even pay the right taxes in the first place. So when it happens, the taxman will continue to come for their direct taxes.
I'm not satisfied with your answer, but I want us to make progress. I want us to get interactive. Masterclass today is brought to us by Goyle. Goyle, they say good energy. Goyle, Yenara, Yedia. We're going to get interactive right after this.
The masterclass is in session, and you can interact with us via Facebook at Joy Business or at Joy 99.7 FM. And if you tweet, the handle is at Joy 997 FM. Don't forget to hashtag masterclass. You can also send us a text on 1422 across all networks, or join the WhatsApp conversation on 0244 340437, and our facilitators will address your concerns. Attention everyone, class is in progress.
Welcome back. This is Masterclass here on your superstation Joy 99.7, and we're discussing tax and your income. Tax and your income with your friendly taxman, Mr. Kofi Frimpong Corey from KPMG. We're getting interactive right about now. Numbers to call 0302-216-541. That's 0302-216-541. You can also send us your questions on 02443-40437. This is a subject matter that affects all of us. And Kofi has already said that once you earn an income, whether you work for yourself or you work for someone, the taxman has something to take from you. That's why I didn't go into types of employment and all of that. Once you are earning income, you have to pay tax. And so the liability is on all of us. Surely you want to understand why the taxman does what he does and how it affects you. We've just found out today here on the show that there's an extra 16.5 after the 18.5% that goes to Senate that you can elect to push to a third party. And if you do that and you do it properly, the taxman cannot take from that amount as well. Pick up that phone, give us a call, 0302-216-541, or send us a comment on 02443-40437. This is tax and your income. We have a first question on social media. This is from Sam in Dansum, and Sam says, Yaw, I'm working as a contract worker with a foreign company. In the contract, they stated that they would deduct income tax and social security. Will that deduction be the same as those with full-time employment? Kindly explain the percentages for me. That's something that's, so I write that question down. I've got a caller on my line. Let's just quickly take that call. This is David from Tema. Let's talk to David. Good afternoon, David. You're welcome to Masterclass.
Good afternoon. Thank you very much for the opportunity.
Talk to me, David.
Yes, I would like to ask a question.
Right.
So, friendly taxman, I don't know how you called him.
Yes.
But
he's a very nice guy.
Oh yes, in fact, I am going to start working with him. Yes, because I feel that there are a lot of things that are happening in our institutions that we employees are not aware of. And I think that it's about time we get this kind of education so that we are enlightened to be able to know that. So, for example, the other tax, the tier 3, for instance,
yes,
meaning that the tier 3 is not supposed to be taxed
if you do the right thing.
Yes, But sometimes you are doing PF. I don't know what a PF is, and also be qualified to be served at the tier 3.
Okay. Please keep listening. Some of our HR guys will call us and educate us on it as well.
Okay.
Thank you so much. That was David from Tema. I've got Frank from Adenta. Let's talk to Frank. Good afternoon, Frank. You're welcome to Masterclass. I'm sorry for keeping you.
Oh, that's okay. Good afternoon.
Good afternoon, Frank.
I want to ask the gentleman, you know, when we go to buy fuel,
yes,
we pay tax.
That's correct.
Yeah. And then it looks like on your pay slip, when they are giving you fuel allowance, it's tax. It's equally taxed.
Right. So you want to know why?
No, is that not double taxation?
Okay. So thank you so much. Please keep listening. This one I can answer it for you. Consumption tax is consumption tax. Once you go and buy fuel, you pay. The friendly taxman did mention, Frank, that anything the employer gives you is taxable. So even if you're getting fuel from your employer, it's taxable on that side. When you go out to buy fuel yourself, it's taxable. And forgive me, but the taxman is morality agnostic. We said that in the beginning. I've got Philip. Philip, you didn't say where you're calling from. Let's talk to Philip. Good afternoon, Philip. You're welcome to Masterclass.
Yeah, hello. Good afternoon. I'm really enjoying the discussion.
Thank you, Philip.
Yeah, but actually the man has really taken me to my tax lectures room. So
right.
I'm really enjoying it. Yeah. So I just want to ask a couple of questions.
Yes.
About the graduated income and then how the tax system is applied on it. So I just want to find out, has there been any amendment with the graduated income application of the tax?
Okay. That's the first question.
That's my first question.
Right.
That's my sense. Okay, thank you very much.
Thank you so much. Okay, so he says he wants to know whether there's been any amendment to the graduation of tax. Maybe you can start answering from his question and answer your way back.
Yeah, Philip. Yes. From January to date, there hasn't been any amendment. But somewhere last year, that is 2019. Sorry, there were an amendment where even the last band was moved to 35%. So that's what they amended. They brought it down to 30%. So since January 2020 to date, there hasn't been any amendment. Let me add though that I think these bans are only for residents. So I also need to also add that for non-residents, their amount is fixed at 25%. So that is that. I think in my other, whilst I'm also answering the questions, let me also quickly interject and say that for the overtime that I mentioned earlier, overtime by the law is only applicable to what the law calls junior employees, and those people are those who earn up to 1,500 a month. So if you are a junior employee, what the law states as a junior employee, regardless of how you attend in your office or in your business or in your company, is anybody who earns up to 1,500 cedis a month.
Okay.
So for that people, such people, if they are paid overtime, that overtime is taxed. If it's not more than 50% of their basic, it's taxed at 5%. Okay. If it's more than 50% of their basic, the excess over the 50% is taxed at 10%. So that one does not go through the normal bands.
All right.
If you're a casual worker as well, and maybe one day you get some job here for a short time, and a casual worker, the wages that they pay you on daily basis is also taxed, but that one is also taxed at 5%. So that I needed also to clarify that.
Okay.
For the fuel, I think you did well by answering that for me. So
I'm becoming a pocket taxman.
Let me also add that anything that you get or you earn as a result of your employment, per the taxman is taxable. Because just for the fuel, for instance, if the issue is that if you are not in employment of that business or that company, you don't have earned the income. So that's why even clothing, when they give you clothing, I think I didn't have the point also to mention clothing allowance is also taxable. The only time that they will say in that is when they say that the clothing you will not be able to wear the clothing outside, or when you are wearing the clothing outside, it will be clear that somebody can tell that, oh, this guy is wearing a uniform. So if they cannot make that clear distinction that that's the uniform that maybe Kofi is wearing or Yaw is wearing, then that one becomes.
I think you clarified it by saying if it's got the company branding on it.
Name on it, and it's correct. So the theatre, let me Provident Fund. Yes, I mean people do Provident Fund, which they take to the theatre. So once again, regardless of the name that you are calling it, what I'm saying that there are processes and rules. If you're in your office or in your company, you guys are doing Provident Fund, I would advise that you register that Provident Fund with a trustee as a theatre contribution. And once you do that, you'll be able to take advantage of that one. And
Will it be correct to say that if in your office there's already an established Provident Fund arrangement, then your 16.5 is already going?
No, you need to register it.
You need to register. No, I mean assuming your company has registered it.
Yeah, if you have registered
and gone through MPRA and all of
correct,
that, then in addition to your 18.5, your 16.5 is already going.
Yes. No, it depends on the 16%, but if you have registered and you are doing 10%, there is the 10% that you will enjoy.
So the percentage that you are taking is the percentage that will enjoy.
Just to clarify, it's not automatic 16.5.
Okay.
You have up to the 16.5 to make it 35. So if you are doing 5 extra, it's the 5 that you will enjoy. If you are doing 10 extra, it's the 10 that you will enjoy.
So find out how much extra your employer is doing.
Correct.
I've got so many questions I want us to be able to go through. I've got now from Spintex. Now says, is chop money taxable? Let's say that the only money I earn is the money my husband gives me monthly to cater for my personal needs and that of the home. Should I be paying taxes on it? This is now from Spintex. It's a very important question for her. Oh, please answer it. Go ahead.
Let me simply say that I need to come back, but I don't think so.
Okay.
Okay.
The next question. This one you didn't add your name. It says, are pensioners taxed on their allowances? I mean, what they take every month?
No, pensions are not taxable. Pensions are not taxable. So that is also, I need to also clarify that one.
Okay. So is it right to say that direct taxes cease for an individual when they hit the age of what? I think you mentioned that earlier.
60.
No direct taxes. I'm saying that deliberately because if you go and buy fuel yourself, you will still pay that tax.
Not really.
Okay.
Not really.
Please correct me.
Like I said, if you earn income, so if you are after 60 and you are doing your own work, because the 60-year retirement age is in reference to formal employment.
Okay, formal employment.
Formal employment.
Right.
So by law in Ghana, or even I only know other companies that still go beyond 60. So if you retire at 60 and let's say you set up your own small business and you are working, as long as you earn income, you'll be taxable. So I will not say that direct tax is at 60. It is at 60 only after your retirement and you are not doing any other work and you are only earning your pension. So that pension.
So if after 60 you are strong enough and you are still doing work and you are getting income, you will still take tax.
You will be taxed.
After 60 years.
Let me also make maybe employees also be aware. I already mentioned the 16.5, which people are very happy. There are also other things that people can benefit. Like the last time we mentioned reliefs. There are a number of reliefs that employees or those who are earning direct income can also take advantage of. So people should also avail themselves for those reliefs, including children relief, education relief, all those other things are there. If you are filing your returns, you can apply to the Commissioner General and you get the
I think I'll come back to you on reliefs. Yeah. We should do reliefs for a whole show. Okay. On Facebook, I've got Caleb on Facebook. Caleb says, please, a little reminder, out of the 18.5%, 13% is supposed to be contributed by the employer. So in total, you actually being allowed 22% and not 35%. I stand to be corrected. This is Caleb on Facebook. Any comments?
Yes, I mean total pension contribution should be up to 35, but out of 35, your employer is supposed to pay 13.5% to you. But even though you the individual will pay the rest, what you should know that what your employer, the 13% that your employer is also paying for you, is also not taxable.
Right.
So even though it's your employer that is paying, it's a benefit to you that you are not going to pay tax on. So,
okay. Franklin also on Facebook says, in calculating the chargeable income, I thought it's just 5.5% reduction from the basic salary. However, I thought the 13% employer's SSF is charged wholly. Please come clear for better clarification. I think that's what you just talked about, right? Okay, and I've got Lovely also on Facebook. Says, interesting discussions. Is it prudent that COVID-19 risk allowances are taxed while the health worker has a tax holiday? Share. The tax man is, well, maybe, let me not answer that question. Lovely wants to know whether the COVID-19 risk allowance for frontline workers should be taxed by the taxman while the health worker has a tax holiday.
No, I think if you listen to the government, the president's presentation, they allow the frontline health workers and they categorize those that they felt were the mostly at risk, for which they exempted them from the risk that they face. So some of them have 3 months tax holiday, which has been extended and other things. So for me, those are the other things. But beyond that, if in this COVID-19 times, if let's say your employer provides protective clothing and things for you to take yourself, I don't think the taxman will tax those ones. So it's not that, but if they give you cash, you see, sometimes the problem is about cash allowances, and the issue is that nobody knows how you go and use the cash allowance, whether you even use it to buy the thing or not. So for the taxman, if any cash allowance that you are giving to them is an income that you are getting as a result of the employment that you are in, so they will tax it. So you should forgive them for doing that.
I've got McCosby, Anthony. McCosby says, I'm really tired of paying taxes. You pay and pay and pay and pay, and to what end? We don't just utilize our resources well, and we end up paying more taxes. We need a tax reform. What we have now is killing the few of us who are paying taxes. It is too much. This is McCosby Anthony. I've got some more questions. Okay, so this is Nana. He didn't say where you are sending this from. Nana on social media says, good afternoon. So which category of workers are entitled to tax reliefs? I've got a few more minutes on the show. I could slip in one more phone call. Numbers to call 0302-216-541. Pick up that phone, give us a call and ask your question. I'm still waiting for my HR people to call. I've got a few more minutes. 0302-216-541. We need to clarify something about income tax. Is it the same as payee?
Yes.
Income tax?
No, employment tax. Let's put that. So because the corporate tax that we mentioned last week is also income tax. But if we are talking about employment tax, then the payee is our income tax.
What is pay?
Pay as you earn.
Okay.
So the simple meaning of pay is pay. So you pay the tax as you earn the income.
Right. Okay. All right. Okay.
So I mean, Ms. Cosby, I don't think I'm not here to hold brief for the revenue authority, but I can say that there are other countries that people pay as much as 40% of their monthly income.
You say 40% like it's a lot. When you earn £700,000 a week, you can pay 40%. So that's why I told that it's supposed to be a progressive kind of tax. So the more you pay, the more you earn, the more you pay. That's true.
So yes, I agree. I mean, as to how, I think for me sitting here with Yaw Barnafo, I don't think my remit goes to determine how the resources or the taxes is spent. So I mean,
we are in the country. Okay, I've got Kobe from USA. Kobe says, nice show, Yaw, to you and your resource person. Are there people or groups of people in Ghana who are exempt from all and any kind of tax, and who are these? I know that this exists in the USA. This is Kobe from USA.
Yeah, Kobe, please, yes, there are.
In Ghana?
In Ghana here.
So, Roko, who is exempt from tax in Ghana?
There is Section 7 of our tax law at 896 that has listed almost 2 or 3 pages of people who are exempt. And I think that if you want to today list all those or not.
So do me a favor, on the next show, in addition to reliefs, give me a list of people who are also exempt from tax. I've got Isaac from USA. I'll just take that one. He says, Brakofi, I'm wondering if individual tax filing works in Ghana. Here in the USA, we file for tax returns at the end of every year, but it appears it's unheard in Ghana. Is there any tax credit for certain overburdened individuals, like paying for daycare, etc., so individuals can apply for tax returns at the end of the year? Isaac Wilson from the USA.
Okay. Isaac, yes, individual tax returns are even mandatory in this country, but as for everything, people decide to choose what they do. Even companies that are critical, I mean, a lot more companies don't pay, and that's why there are penalties for failure to file. So each employee at the end of the year is required to file his or her return by the end of April. So for 2020, every employee is required to file his or her tax returns by 30th April of 2021. But you are right, quite a number of employees in Ghana don't do it, but it is there. And there are penalties for failure to do. So if you fail to do and probably the taxman comes to you, it's not for want of maybe education or for lack of education, but it is there, the law is clear on it. And I think the penalty for failure to file is currently a bulk amount of 500 plus 10 cedis of every day that you fail to file. So if, let's say, you are supposed to file by April and you go and file it in June, every day from 30th April to June, you pay 10, you are fined 10 cedis plus 500.
Right.
So those things are there, and I will encourage people to try and file. You see, the refunds are part of the filing system. If you don't file your returns, you don't know whether you have a refund or not. So I mean, we need to also to be ensure that we are encouraging people to go through the filing sequence. So once you are prepared your returns and you are filing, that's how you know whether the one you pay and apply and other.
Thank you so much, Kofi. I wish we could continue. Our time is up. We continue that conversation again next week, and I'm sure we'll have a lot more time to get interactive next week. This has been Masterclass. We're talking about tax, income tax, and your employment. Next week we continue in this same line of conversation. Up next, we continue with The Ignition with Sammy Forson. Thank you for listening, and see you same time next week.